What's going on, everybody out there? I'm feeling a little spicy today, so I'm going to leave the background music going for fun. Let me know if the background music is annoying, but we're going to let some Doge-wave run here. Let's get the mighty Doge. Let him run. The Doge, where's the Doge? Where's my Doge at on my charts? It's under track. Yeah, here we go. It's way down here. Dogecoin, you're underperforming. I'm disappointed. One of these days, the Doge will be back. One of these days. Anyway. I'm obviously not a big Dogecoin fan, but yeah, I'm feeling a little spicy today. CTT hype. Bonjour. What's going on? Bonjour, Aussie? Is that second part a French word, or does that mean you're in Australia or you're in Aussie or something along those lines? Because I honestly don't know. Don't have a clue, but just stop moving the screen around. I want to move this. There we go. Put top center. How about that? All right. What do we got here? Also, the one and the only. The one and only. What's up? All right. So, yeah. What I wanted to kind of talk about today was, let me know if the music is annoying. Just start commenting if so. So Heath put out this video. Now, for some reason, when I have too many YouTube tabs open, my stream comes to a crawl. It acts retarded. So I have to flip to. I have to just have a few of them open. So I can't have his video open right now as I wanted to. But so Heath came out here. Now we all know Heath. Love Heath. He says bear market. He thinks the bear market has begun, and he says that this is basically we're in bear market territory. And his thesis is, now we're both looking for a bounce. Now clearly Heath is looking for a bounce here. He's been clear about that. So I think he's looking for maybe the low to mid 50s potential bounce, and then a curl over. I can see us bouncing to a lower level, making a new low somewhere around 38,000. And then resuming up. But this is what we're going to be talking about today. Why do I think the bear market is not here? Why is the bull market still on? And is there going to be a bear market? Or is when the bear market is here, is it going to look like what we think it's going to look like? What's going on, Antrap? But, as usual, my usual disclaimer. I'm not a licensed financial advisor. I'm just here sharing my opinion about what I'm seeing in the markets. And if you listen to me, you're going to end up losing all of your money. I'm living in a van by the river, which in 2022, that might be more of an accomplishment than a downgrade. But, all right. What I did want to share with you is Glassnode put this really good video here talking about the leverage. Somebody in our Discord, the CTT Discord, shared this a little bit ago. It's a good explanation of perpetual futures, futures open interest. Let me go ahead and take this video. I'm going to put it in chat over here in my stream chat. You guys can check out their video here. But I'm going to play a little section of it for you here. Let's kill the Doge-wave. Let's turn up desktop audio. This is the summary and conclusions of this video. So I'm just going to give you the last ending of it here. And let you guys see what they're having to say. And I don't know who it was, which individual it was that's recording this, is talking about this. So I don't have a name for it. It's a Glassnode video. I just saw this before I went live, so I thought this would be really cool one to share. So let's listen to the summary and conclusions here. And this is pretty much exactly what I'm seeing in the markets. This is why I'm kind of turning really uber bullish. If it'll play.
It's the all-time high in early November. So we've got this regime of heavy liquidations to the long side, coupled with decline.
And then why does my computer have to crash when I'm playing YouTube and streaming on YouTube at the same time?
Declining futures volume and increasing open interest. So there are a lot of traders allowed to hold positions open, not being forced to close them. Daily traded volume is declining into price weakness. It feels like we have a buildup of shorts piling in, layering on bets into price weakness, and that the long dominations chart could be setting up for a short-term reversal. It is important this week as at all times in markets, to enter it with a framework of probabilities. As we've explored, older coin spending is at a minimum, and several of our lifespan metrics are printing values that suggest we are near a local low based on history. At the same time, we're seeing rising speculative interest in the futures market at all-time highs, and it is continued building in the face of price weakness and decline daily traded volume, which suggests a large number of short traders sitting on positions.
I'm gonna kill that video. That my stupid. It's something. There's some kind of plug-in issue. I don't know what's going on. It's my browser probably, but my PC's got 64 gigs of RAM and like 32 cores in it, so I highly doubt it's my computer. All right. And I've got a gig internet up and down, so I doubt that's the problem. Yeah, sorry guys. So I just killed that audio. So basically, they're seeing rising open interest. And there's some background noise. Sorry about that. Rising open interest and into price decline. And so what's happening is it's becoming kind of clear that the derivatives market is leaning towards. You see our open interest rate is reached all-time highs. Our open interest in total is reaching all-time highs here, and it's been increasing on declining price without long liquidations. So let me go find. I have another tweet for you here. I retweeted something that Will Clemente tweeted. Maybe this will be helpful. Bitcoin now spent demand open interest dominance. So there's an open interest metric. So yeah, here's a tweet from him about open interest dominance. You can see this inverse correlation. So you see that we had this long liquidation event. So we were net long open interest likely, and here in November and then early December, you see this kind of spike in open interest and then the sell-off and then the huge just crash of open interest. And then we've had this massive increase in open interest as price is more or less declining. And this big sell-off over here, this trap that we had set, and this big sell-off did not correspond with a decrease in open interest market cap, right? So we have a massive net increase of open interest as price is declining without, when you see price kind of collapsing like this, but the open interest rises. Let's just go back in time. When's the last time we saw that type of thing, right? So springtime, we saw a spike in open interest, and then as price declined, we saw open interest get wiped out, right? As longs get liquidated, they're getting wiped out. And then open interest rose to a frenzied level in the summertime, right at our capitulation bottom, which was another indicator that open interest was stacked to the short side. And sure enough, when we rose out of that, we saw a big open interest collapse as price took out the shorts, and then we continue to do so. And then we had a long liquidation event, so forth and so on. So this constant interplay of open interest being stacked to one side or the other. Now, open interest is, again, reaching record level highs. When LOL downs. So somebody says gotta get to 32. When you say gotta get 32, is it 32 gigs of RAM? I think I have. Don't I have 64? I think I have 64 gigs. All right. Well, nonetheless. So this is an indicator to me. There's several other indicators to me that tells me that we're entering a net short position. And what's so fascinating about the timing of this, you look at, again, I think people I've seen a lot of people say that we're in a downtrend. I guess it depends on your time frame. You could say this is a downtrend, but in my book, we are clearly not in a downtrend. That this is definitely still an uptrend, right? And then this is maybe my time preference. But if I just go to zoom out 1 week chart, so we had a significant high put in, right? And then springtime, and then on a weekly, it's a pretty nasty wick reversal to the downside. And then we put in a low right around 32,000 over here. And then we made a new impulse, made a higher high. And so now it's a marginally higher high. The delta between these two levels isn't too significant. So that is some sign of potential weakness and slowing down to the upside. But that's just slowing down to the upside. So far, the delta that we put in on the higher low, though, is bigger than the delta on the higher high, which means, what's that? When you start putting in, when you have less of a downside and less of an upside, that's called consolidation, right? So in theory, what I actually see more of happening on the price action, I still see this price action as an uptrend. I don't, again, this is a high, this is the low, this is a higher high, and so far a higher low. But you've got this situation where the higher high coming in here, it's marginally lower, but then the lower right here from this point to this point, so you have this consolidation. It's slowly consolidating. Now, it could turn over, but we'd have to lose this trend line. In my book, we need to lose this trend line for more of a macro, a low. Now, the 200-day moving average is the bigger concern to me, but really, what this market is turning into, if you look at the 200-day moving average, this is called the institutional moving average. And institutions generally wait to accumulate when price is below this. So it's kind of broadly thought that the 200-day moving average is more or less the fair value of an asset. And that's for the better part of a year, that's the average price, the daily closing price for the past year for this asset, right? So I'm going to put on some more music here for myself. Look at comments. So that 200-day moving average is often used as the general fair value. So institutions or larger players will sell when it gets really far, price gets really far detached from 200-day moving average. When it gets too far detached, they sell it. And then when it's below the 200-day moving average, this is when they accumulate, right? That's why it's called the institutional moving average, generally speaking. Now let's look at the NASDAQ chart. I'll show y'all what I'm talking about. So it's been up and to the right here lately. But you look at the history of the NASDAQ. When is the best time to accumulate? Look at this chart and just tell me, what's the best time to accumulate this asset? Right? This is what big players do. It gets below that little purple line for a little bit, and then it just keeps on trucking. Those are your points to buy. So I contend that as Bitcoin matures, of course, it's going to look more and more and more like a NASDAQ chart. And this is, like the 2017 equivalent. The Y2K top is kind of the 2017 broad crypto top. And then it had a bit of a lull, and now it's taken back off again. It's an exponentially increasing, exponential adoption asset. But you look at this line, this is where accumulation lies. Now, let's look at Bitcoin. So now if we go back further in time, you can see there's a little bit of different interaction. But in my opinion, this is the time to accumulate the asset. Just like NASDAQ, you get below that 200-day moving average, that's the accumulation period. And so bigger players are what it's going to take to push this asset up to higher and higher price levels. So, in my opinion, this is an accumulation opportunity because I think the bull market and bear markets are dead. I don't think we never got anything like a parabolic top. Let's go back to my BLX chart. Now I'm taking a look at comments here. What's going on, Greg? Good to see you. Do you still think a bounce to 45, 46, then down to the high 30s? I think the high 30s is likely. What institution is buying now? Lots of them. I see insurance companies. There's going to be Fidelity is allowing. The story just came out the other day that Fidelity is going to be putting Bitcoin into non-Bitcoin focused trust or non-Bitcoin focused funds. There's a ton of them getting involved in the space, and so they're going to speculatively start to add Bitcoin. You see, like big Square on Barkley. Big name player, number 1 overall draft pick by the Giants several years ago, running back, if you don't know who he is. Dude's, they call him, what's it called? He's got the big thighs. I forget his nickname, hilarious nickname. But, he's a big name player taking part of his paycheck in Bitcoin. So that's going to help with retail sentiment, obviously. Where's my other, I don't know what I was looking for here. I was looking for why I was thinking 40s. I want to show this, though. This thread I put out a while back. You look at the bond. There's this insane correlation between the bond yield and Bitcoin. And you see what happened over here in September. The bond yield spiked, and Bitcoin was doing this bottoming pattern that we almost exactly what we see going on right now. And then Bitcoin made a big move to catch up. So I kind of see that playing out. But if I go look at the chart, let me go answer your question about 43K. Why 43K? Why 45? I mean, why 45K and then back down to 38K? All right. When I look at the different supply zones that we're talking about here, the bears are going to defend this area right here pretty heavily because this is a block where they entered heavily. They entered heavily on the breakdown right here, so they're going to want to defend that area. So let me get rid of this tool. So this is the area that the bears are going to defend pretty heavily should we get back up there, because that's where a lot of them took this breakdown and went net short into this pop up here to 48 and then back down, especially the breakdown. So that's what they're going to defend. So let's put that as a resistance. So they're initially going to defend this level pretty strong. The bulls are currently defending the same, lower level down here. You see this after the breakout over here and this wick low over here. This whole area is what the bulls are defending right now. So this is your kind of zones that we got going on here. Now, the reason I say 38,000 is kind of the worst case, I don't know that we actually get down there. But that happens to be weekly support, and that's at the top end of this accumulation range over here and the January accumulation range. So this whole, if I drag it back over here, you can see where I'm getting this from. So when after the first huge impulse that we had, where do we run into resistance? We ran into resistance right here in this area that we're fighting for support in. And then Elon adding Tesla was the piece that broke through and got the bull market going again. And then the bear market capitulation, this was that trap level, right? And then our breakout, our SOS level was right there as well. So that's what the bulls, this was resistance, 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 and we finally broke through all that, broke through over here, lost it, and then broke back through, and then confirmed it as support over here. So this is now what we're fighting to hold again, right? Now, should the bulls fight to hold this level, then the bears are on defense when we come back up into 50, 45, 46. That's why I think we'll go ahead and eventually work our way up to that level. And then the bears are going to defend with a lot of fervor. And price is going to come off probably pretty well as they try to pile drive into this thing on the way down. Worst case scenario, and the reason I kind of get this worst case, let me just show you really, honestly. I'm not going to lie. I don't use fractals for trading, but I use them for historical reasons. This is why I think that 38K is the worst case scenario. When I line all this up, sorry, we'll line this up right again. You just see the obvious parallels here in the levels. So what you had in this whole sell-off was you had some trading in a range. Then you broke down to a new level below, found support, and sprung out of that level. So here's the kind of the pattern, right? You trade in this range, you put in a trap, you trade in the lower range below that, right? So you hit some wick downs there, you get below these wicks, you trade in this lower range, you put in a capitulation low right there, trade downward into that lower support area, and then bounce out. Same thing, exact thing happened in September. We had a sell-off, we traded in a range, we put in a trap, we traded in the... Okay, so my computer just freaked out on me. All right, everybody. All right, hit the like button. Thank you for the like button. Okay. So if I put this fractal on here, I'm going to put two fractals on here. Then we're going to look at my BLX chart. Okay. So I'm going to just layer this fractal in over here. You see the obvious parallels. Trade in a higher part of a range, put in a trap, trade in a lower part of a range, and then have a defense of a level. So you see this exactly. I mean, I honestly didn't know it was going to line up like this until I just put this on here. But see that move, and then the bears defend with a lot of fervor, and then it pile drives it back down. So this is why I think, again, a wick low, 30. This support range, these weekly levels that we have down here, 38,200, 39,000. Don't think we're going to wick below it very long if we do wick below it. I do think 41 is kind of the level that we're going to end up holding ultimately on a closing basis. You see, we haven't closed a daily below 41,000. Right, these are all just wicks below. If we go zoom in, everything it's 41 is holding on a weekly closing, a daily closing basis, which is above the daily closes of this area and well above all this over here. So we are putting in so far a higher low, and as long as we continue to close dailies above this key support, and this trend line here is a really important one in my opinion. As long as we continue to close above this, it's still net uptrend, net bullish. But I can see where we're trading this lower range where we get a selling climax. This is kind of your capitulation. Let's put a C here, capitulation low. And then you have this rebound to the top end of this bottom half of the range. Bears are going to defend with a lot of fervor right through here, right around that 46.5 range, and then push price. That's going to push price right back down, and then you get your second low here. What's interesting about this fractal is it comes in right below that trend line. So this is when you're looking for a spring, you're looking for a fake out. You're looking for, now everybody's looking at this trend line too. And you're going to have a bunch of people see this close below this trend line. And that's probably going to put a daily close in right here, just like it did over here. This was a total fake out. This was below all key support levels. This was like bad news bears when it happened, right? We were watching a lot of these key support levels. We closed right below. And we're like, oh boy, if we close below that, it's not good. And it immediately bounced up out of there. So the same pattern could play out where we close below what looks like key support very briefly and then blast out. That's what I'm anticipating. And the reason I'm anticipating a blast out is I still see plenty of signs of large scale buying by institutions, right? So there continued to be rampant accumulation. Like through here, we saw it. There's a ton of accumulation here. There's a little bit here, and there's a lot of accumulation going on right here. Lots of signs of accumulation. There's no large influx of coins onto exchanges. There's a lot of fear in the market. There's just a lot of indicators that say that we're probably reaching a local bottom, in my opinion. And again, bounce back down. That's why I think that's going to happen. If you look at this fractal, now I'm going to throw another fractal. That's that summer fractal, kind of resized to kind of fit the recent price action. But you get the idea, right? Again, it's that you have a markdown, you trade in a range, put in a trap, and then trade in the bottom half of that range, close below key support, and blast out. Same exact thing happened here. Markdown, trade in a range, trap, trade in the bottom half. And this didn't really do the same exact thing. This was your like capitulation low. It kind of bounced around right above that, or right on that Heath level, we'll call it, and then blast off, right? So the same thing could happen here. Clearly, we could bounce around. Our little move could be back up into here, and then the bottom could be 41. It doesn't have to go to 38,000. Nothing says it in my book. Nothing says it has to go down there. Bulls could defend this trend line and blast off, right, and then off we go. And it's because of what I'm seeing in the derivatives market that's driving me to these conclusions that we are definitely net short, short side. There's a lot of buildup of the short side above this area. This whole area up here, there's a lot of shorts that need to be liquidated in this area. A lot. I think all the way from low 50s so far. This whole area is net short. Quite a large amount. So if you get up into this area and start to break through, when you get to the other side of this, it's going to be a big green candle of just like massive liquidations to the other side. Kind of like, this over here. Or maybe this over here. All right. But let me do another fractal here for you real fast, just for fun. Funsies. All right. This one takes some resizing to kind of fit, but you see the same more or less pattern, right? Do we not see this pattern playing out time and time again? And again, I don't trade off of this. I'm looking for just intel patterns, behavior, market behavior is what I'm looking for. I'm looking to kind of map out in my head what is the market behavior related to this asset? What's happening? Why is it doing things like it's doing? But you see that fractal. I just took that September fractal. It's the pattern of behavior. Markdown, capitulation, so the selling climax, trade in a range, put in a trap, mark down again to the bottom half of the range, ping pong in the bottom half of this range, and then blast out. Right? It's the same mark down, selling climax, trade in a range, put in a trap, mark down again to the bottom half of the range, blast off. And literally every time we've done this, we have two examples in 2021, and now this is our first one in 2022 that we're doing this. Of course, this started in 2021, right? The open interest market has done remarkably similar things. This was a wipeout of the longs. So when you look at the long liquidation dominance, very stacked to the long side. And so this tells you that shorts are really piling up all through here. And then when you get through that, you get a short side cascade wiping out open interest to that side. So that's just what I'm seeing. This is the patterns. This is the behavior I'm seeing. I'm seeing this. This is like, if you think about this, this is both, you know, shakeout of the bulls and a bear trap, right? Trading the bottom half of this range, looking for more breakdown, and then just blast the other way. Get the shorts all built up in these ranges over here. All right, let's take a look at comments here. 4-year cycle is dead as a doornail. There is no more 4-year cycle. It is totally dead. It's dead. Totally dead. Forget it ever happened. It is not going to happen anymore. Period. End of story. The 4-year cycle is dead. The reason, I don't know why I keep having to go over this. No problem, John. 4-year cycle. I've been saying this for the better part of a year now, right? When this rolling top happened, I said, if y'all go back and watch some videos that I was doing back, I mean, I was pretty excited about the price action all through here, but I started getting really nervous. Every time we would go live, I would start to measure, guys, from this move is, you know, X amount. Let's look at the BLX chart. I kept doing this over and over and over again, and I kept doing it for a reason, because I was getting real nervous. Like, okay, something's weird's going on. This is not normal behavior. It was too far. We went too far too fast. Oh, look, a little fractal I've hit. Legacy old fractal. That's fun. All right, let's go to the weekly here. This is getting too crowded for the daily. All right, so I'm listening to some music in the background. All right, so here's my long-term BLX chart. Now, what I kept doing last cycle is I had these boxes, and I just very simply measured. Okay, here was the move from halving until this point in the cycle. We, you know, this cycle we were up X amount of percent. I was comparing mostly to 2016, 2017, and I noted we were way above where we should have been for this market cycle in the very first rolling top over here. Now, maybe like very nervous, but. The reason I think that the 4-year halving is like done is what happened were there were large players that knew this information about the halving event and then the 4-year cycle was just all over the internet, and so people, large whales, large players decided to play this, and what they did is they played retail like a fiddle, right? They drove this sucker up way faster. Had retail FOMO in like crazy over here, going, oh my goodness, the 4-year hype is real, so forth and so on. But they got way ahead of its skates. They front ran all this price action, and then China came and banned and whatever else, and a big old markdown. But there were whales sailing into this like crazy, right? So they knew what was going on, and then accumulating down here. But you see this, you know, constant repeating pattern of price getting ahead of itself, and then the derivatives market pushing price both ways. But the biggest thing is, back in 2013, the halving, I mean, first of all, this is a highly speculative asset, and hardly anybody understood what the halving was going to mean for price, right? The supply cut in half, so forth and so on. It was not a well-understood phenomenon, and it just created this supply shock, you know, more or less seemingly out of nowhere. All of a sudden, we've got less supply, and then boom, it didn't take long for it to create like a big supply shock. 2016, 2017, a few people were clued into this, but most people still, like I've been in technology this whole time, right? And I knew about Bitcoin. I didn't know, like I'd heard about the halving, but I thought it was more of like a minor mechanism. I didn't really think about it in the context of markets and reducing supply and everything else. I just thought this is a mechanism to you know, as more miners come on and the price goes up, then the halving makes sense because we have to, you know, the miners are getting paid too much at this point, more or less, right? But I just, in my head, I thought of it as a mechanism to help, you know, basically encourage a lot of mining activity when the asset was young, and then over time as transaction volume, I'm still answering this question, so I'm gonna leave this comment up. As transaction volume increased, then, you know, and the transaction fees increased, then that would take over what the primary incentive of the miners was. That's what I was thinking, right? I didn't really think about it's going to cut the supply in half, create a supply shock, but sure enough, it did. And so, some people were clued into it. Most were not. But you can, but a lot more of the market was aware of it. Then after the big price move to $20,000, but I mean, a lot of the market didn't even know what Bitcoin was through all this, right? Okay, so then we get to 2019. Now Bitcoin's a much more well understood phenomenon. The $20,000 spike created a lot of interest, and this looked like to me the halving was trying to be forward priced in, maybe a little bit too aggressively, too far out, right? And then we had a slow decline into the halving, but that was a big move from $3,000 to $14,000 ahead of the halving, and it was slowly decreasing. It really, without the black swan event of the the COVID crisis, we would have probably slid into the halving closer to $10,000, which is only half the price of what it was at the peak over here. I don't know. Let's see here. The 1,000. We slid into this halving at 7. I guess it did recover pretty well. I don't really think that one through there on the 2016. It recovered. So this halving was starting to be priced in coming into it. It looks like, but this one wanted to be priced in maybe too aggressively. Was selling off. The COVID crisis was an outlier that created this big price decrease and then a bigger than expected rebound after the halving. But what I really strongly think is going to happen now that everybody understands the 4-year cycle, quote unquote, and the halving, the market is going to forward price that in. If you guys ever trade stocks that have a large dividend yield, I'll tell you this is an interesting phenomenon, and I used to try to trade around it. But right before the dividend is paid out, the market reprices in the asset. So if I go look at like an XOM, let's look at XOM real fast. They've paid a dividend for a million years. All right, so let's go zoom in here. Let's go find their dividend payment date, their dividend date, or their ex-dividend date right here, right? So every single time coming a dividend date, the market reprices in that dividend. It's like every single time, the market on the dividend ex-dividend date. Sorry. You see a price decline on whatever it is that you're tracking every single dividend date. That's the market pricing in that dividend on the ex-dividend date, right? So it literally declines by almost the exact. It's 87 cents. I bet you it declined by about 87 cents. But what the weird thing is because of the way algos trade, there's almost always follow through. It's almost like a super predictable trading event. You can trade these dividend dates and generally go short right after the dividend date. And it takes about 3 days. It's about a 3-day rule. About 3 days after, then it bottoms out. But like almost every single time the dividend comes in, it's again, the market immediately prices that in. But the market is forward looking, right? So it knows these dividend events are coming. And so obviously the market, when you have 87 cents per share being taken off of the balance, so you're paying out, in this case, Exxon, right? So this is a more or less sideways market. It was actually, it was bouncing back here. On the ex-dividend date, it cut the price, the market cut the price from $45, $48 to $44, whatever. So the market knows that 87 cents per share is going to be lost, in paying out that dividend. So the balance sheet should show a net 87 cents less on the balance sheet for that, for every share. So the market prices this in. Well, the market is exceedingly, efficient, knows this, and it's going to price this in every time. Again, there's an interesting follow-through that almost always happens. It's about 3 days after a dividend gets paid out that it goes down almost always. Like here, let's see, this one's an outlier. There you go. So it got priced in that day, but the price was on the way up. So we had a little bit of price in. It ended up being a green day, but the market ultimately priced that in. But point is that once the markets well understand something that's coming, like the halving, the more market participants understand it, the more it's going to be forward priced in. So if ever there was going to be a super cycle, right? This is exactly what a super cycle should look like, where it's really, really, strong out the gates here, but then it consolidates for a while and then makes another big move to the upside. But it's gonna, a super cycle, in my opinion, people talk about the super cycle. I think the super cycle should ultimately just look like this. Maybe with bigger numbers, right? Just up and to the right with bigger numbers. That's a super cycle. Up and to the right with some sharp pullbacks. But that's what a super cycle should look like. And it's going to start out looking something like this. Big run up, consolidation, big run up, consolidation, and then boom, you have your new paradigm, right? So I highly contend that based on all the fundamentals that we're seeing, what we're seeing right now is much more of an early part of a long run. Big run up, consolidation, big run up, consolidation, big run up. That's just what I think is going to happen. Now, 223,000 by May 31st would be nice, but I don't know if that's going to happen. But nonetheless, you get the idea. This is the idea of it. This is clearly what I see happening, very clearly. So that's my opinion. But let's go. I think the 4-year cycle is dead as a doornail. That's just what I think. Okay. All right. Don't clone my fractal. Weekly RSI bearish on the higher highs. Okay, let's look at that here. So let's go to the newest comments here. I've been talking a lot. Are we likely going to head to another Wyckoff distribution? So, yeah, you can expect similar type behavior to continue playing out. I do think so. Now, is it going to be purely Wyckoff? I would bet that this like insane, perfectly looking Wyckoff patterns that we've been seeing will die out. Like, it won't be so clearly obvious as we go on. Just like you can find a million Wyckoff type patterns in the NASDAQ and different large caps, but they start to kind of fade away, and it becomes this, I guess on a smaller time scale, you can probably find them all over the place. And maybe, I don't know, the NASDAQ might be doing Wyckoff type stuff. I haven't looked at the NASDAQ to see, to really go look and see where I see any sort of Wyckoff patterns. Again, I don't trade them. I'm just fascinated by them. It's more the behavior that I care about than the patterns. But to answer your question, are we going to get another Wyckoff distribution? Possibly, yeah. Maybe a different looking one, where you get... So this was a distribution, an accumulation. This is your backup after an accumulation. Apparently this is pretty normal for this type of thing to happen. Exactly this to happen. I'm on a weekly now, so we're kind of zoomed out here. But this apparently is fairly normal. But this ultimately was a small Wyckoff accumulation, small Wyckoff or distribution and accumulation. And I think we have like a medium-sized Wyckoff distribution and accumulation here. This is a little bit larger one, small one, medium, right? This is Papa Bear. This is Baby Bear. Or maybe this is Mama Bear. I don't know. But yes, I would not be shocked to see the next move, end up something that looks very familiar to those of us who've been now forced to watch these silly Wyckoff patterns. I would not be shocked to see that at all. But again, if we're going to get a super cycle, or if this is going to turn to NASDAQ, I think if you look at it this way, here's a way to look at it. The accumulation, the Wyckoff patterns on the NASDAQ happen at an angle, right? Or like, the tech, QQQ, whatever you want to watch. So the Wyckoff patterns actually kind of happen at a slant. So what happens is you get these 3 tribe patterns and accumulation that kind of goes up, and then a pattern, and then accumulation. But it just slants upward. It keeps doing this over and over and over and over again. That's kind of what I've seen when I sit there and look at these. Like I haven't gone through the effort of trying to map out okay, this was a Wyckoff, this phase and so forth and so on. Because again, I really don't care. My general trading strategy, just using the moving averages and patterns and support and resistance, we can navigate around Wyckoff patterns pretty well, regardless of exactly which pattern we're in and how they play out and everything else. But yeah, I could definitely see that dead. I think I did call. I've been saying forever that Margaret's going to play retail. Yeah, Will's totally in charge now, unlike in the past. Oh, I'm sorry. I had a comment up. Yeah, sorry about that. All right. Any POW coins you consider mining, looking into now with anticipation of ETH 2.0? The last one that interested me was not a standard POW coin, was Raven coin, and it did really well. I called it out on a live stream, I guess a long time ago now. So I did do some mining of Raven coin. Where's it at? But yeah, I guess we played this pop right here. The last time I played this was what was interesting to me about Raven coin was it's GPU mineable, right? So it's ASIC resistant. So I talked about it over here when it had capitulated, and I was like, all right, this might be a good time to start mining some of this. So we did, and then I've been out of mining it for, I don't know, 3 months at least. But now at this point, I'm really only interested in mining Bitcoin because it's the only one I know is going to be around. It's that simple. Out of all the POW coins, I could see doing a script miner because you can merge mine with a script miner. You can mine both Litecoin and Dogecoin. So I mean, again, I'm not a fan of Dogecoin, but if I can mine it cost effectively and sell it, and buy Ethereum or Bitcoin or something with it, then I'm all for that. But I can also mine Litecoin with. Oh, we haven't talked about Litecoin's MWeb upgrade, have we? This is a big deal. This is yeah. So Litecoin is going to get a major upgrade. That's going to make it. So y'all have heard me say, probably if you've been listening to my live streams or videos for a while, I've said forever, Litecoin's useless, right? Compared to with Bitcoin and the Lightning Network, I just don't see a point for Litecoin. However, with this MWeb upgrade, what it enables is really compressed data sets. So it'll help. You could run a full Litecoin node in a very small footprint. It helps with fungibility and basically obscurity, privacy. So after the MWeb upgrade, Litecoin will be even more lightweight, right? So it's already got a lighter. It's got a lighter block organization, more transactions per block, so forth and so on, and faster block times. So it's just a lightweight Bitcoin is all it's ever been, right? But with the MWeb upgrade and moving able to compress the data sets, you'll be able to again run a full Litecoin node on a very small piece of hardware. Obviously that's not mining; it's just a full node doing auditing of the ledger. But you can run a full node really lightweight, and it really drastically increases privacy. So. I was pro Monero for this very reason. Monero was like the leader in privacy, private transactions, and then some of the others started copycatting them, and even Litecoin has had some work in that area. But the really neat thing about the MWeb again is just it's the truncation of data and the lightweight, how lightweight the storage requirements are going to be. So I think this is going to give Litecoin some decent real world use. So I'm gonna take Litecoin off of my total trash list. I still don't see the point in Doge. They need to do a lot of development on it for me to care about it. From a technical perspective, again, I'll trade it if mine it if we get another big move in Doge and it's really up here a lot, then I'll use script miners to mine Doge because it's highly profitable. So if it's mining, it's profitable, or trading is profitable, sure. But Litecoin, I think, is going to get some real world usage. So. This also means that it pushes down Monero for me. Like Monero, Dash, Zcash, they all matter less. I got Zcash on here. They all matter much less to me now. There's Zcash. And Monero. I think Litecoin is now the best alternative. Once it gets the MWeb upgrade, it kind of negates the use case for Monero and Zcash to me. So, that's a big deal. So now I'm warming up to Litecoin, both because it's tradable. It's been trading very nicely as it comes into the support. You can see the downside. It's been in a terrible downtrend for a really long time, right? But you can see the downside is slowing down. You see, it's just this is just the momentum. The momentum to the downside is slowing versus Bitcoin. And I don't know you're going to get something that looks like this, but I would bet a big breakout's coming because again with the MWeb upgrade. I now, honestly, in all honesty, see Litecoin as the second most viable alternative to Bitcoin. And what's great about Litecoin, I'll give it some more props here. I mean, this is, What's really good about it is there's the risk factor so Satoshi is a risk factor for Bitcoin, right? If Satoshi were ever to come out and say, hey, yeah, I'm Satoshi, and I'll prove it by moving some coins out of the original wallet or something. That's a big risk factor for Bitcoin that could really crush Bitcoin's price. Now, granted, it's going to crush everything, right? So Litecoin, they're all going to come off if that were to happen. So it's really a risk for all crypto. If Satoshi is ever found out, it's a short-term to medium-term risk as all crypto is going to get crushed under that risk. Litecoin, though, interestingly enough, because Charlie Lee sold all his Litecoin, there is no founder or anybody holding, the original keys or anything like that. That's not a big risk factor that somebody just comes out that has millions or billions of Litecoin that can just dump them on the market. I guess it'd be millions, but nonetheless. So some pros there. So I see and this is why I keep watching it so close. I just see the momentum slowing down. It's definitely putting in support. You see this low right here we put in? This is the weekly low from 2017. I've been watching that low go all the way down to the 4-hour level. This is what it's been doing. So this is the lowest weekly level below, kind of almost like a bear trap. But in this range right here, it has been like a champ holding this range. And now it could break down. That's the other part of this. Clearly, the market could just keep pounding into the sand and off we go. We just might have a little bit of a break here while it's fighting with this level, and then it loses its momentum, goes to the downside. We're watching for that. But with the MWeb upgrade coming, and Bitcoin looking still fairly bullish to me on fundamentals, I would put I'm going to be long Litecoin quite a bit here before too long. Let me show you this one more thing. Okay. So, Litecoin likes to outperform Bitcoin both directions, upside and downside. So, what I've been waiting for is a bit of a Litecoin capitulation, and we kind of had it. You see over here in the summertime, when we had this capitulation low on Bitcoin, Litecoin followed suit. We had a weak bounce by both of them, but then on the sell-off, Litecoin lost more ground than Bitcoin did. Right, so Litecoin made this huge capitulation low over here. And then from this point on, if you had bought Litecoin at the bottom of this move, I guess Ethereum too, you would have vastly outperformed. Let's line that up. You would have, I guess not vastly, but yeah, you would have for a period of time right here outperformed Bitcoin. I guess overall, you didn't. You only got this little move here. But from this point on, you had a pretty good opportunity to take a trade. Looking at that now, it's not as exciting as I thought. This one was much more interesting. This was the warning that Bitcoin is rolling over. And we had that here, right? We had this Litecoin pop that was kind of like a warning that Bitcoin is rolling over again over here. But my point more is on the Litecoin side. If you trade Litecoin and you wait for this, you seem to always get this one massive move and then Bitcoin rolls over. So if we do recover, kind of the bigger point is here, if you're looking at, if we do recover from the lows, so if you take from these lows over here, right? You remember, guys, we're watching this bit of sell-off from that low right there. If you do, Litecoin likes to track Bitcoin on the recovery. When Bitcoin's really strong, Litecoin will lag. And then as Litecoin starts to roll over, or Bitcoin rolls over, Litecoin likes to make this one big move. So I just see the detachment here. Litecoin is detached again from Bitcoin's price, kind of like here. And it likes to make a pretty sharp recovery. So more tradable than something I would continue to hold. I actually hold 0 Litecoin right now. I don't have any. I'm looking for the next trade on it. I have 0 Litecoin. So all that said, all this, the MWeb upgrade, everything else, those are more tradable events to me. Again, I'm not super bullish on it long term. But it is after the MWeb upgrade going to be more viable as a competitor. So to answer your question on the proof of work side, probably that means that I would be willing to layer in more script miners, ASIC miners for Doge and Litecoin after this upgrade than before this upgrade. To answer that proof of work question, that's really maybe the substance of it is I'm looking for the next trade on Litecoin. See if I can't get that little bit of outperformance especially if Litecoin wants to break out here. The other potential is that all this consolidation we have, some of these guys who have been watching it are right, and we get a pretty big breakout all in all, and it's bigger than those pops that we saw early all through 2021 with that upgrade coming. But that would be the one coin. This Litecoin would be the one coin to be willing to mine. Outside of Bitcoin and Litecoin are about the only proof of work coins that I'm interested in mining. That's probably a very long-winded answer. The Litecoin and Bitcoin, it's the only ones I'm mining. I'll leave it at that. Yeah, gotta upgrade the van. Willie Woo ahead of the crowd. It's a normal growth cycle now, no 4-year cycle anymore. Yes, Willie was probably right. Although Willie kind of gets some stuff wrong from time to time. Pretty wrong. He got something really badly wrong not that long ago. It's still too early to call the 4-year cycle is over. Man, I'm going to tell you why the 4-year cycle is over. Hold on. I'll show you. I will just demonstrate it to you. Now, don't get me wrong. I think the halving is still a critical event, right? But it maybe a better way of saying it. The 4-year cycle. I think we are going to convert from oh my goodness, there's like not enough supply and everything just starts shooting up because there's not enough supply all of a sudden that people didn't expect to. People are going to expect that, and it's going to get forward priced in. The market's going to mature, and we'll probably have some volatility around that more than just an insane increase. So after some time, it could become a sell the news event. Think about that. If everybody understands the halving, and everybody now knows that the halving is coming, and we know there's a big price increase after every halving because of the supply shock, right? Because of the supply reduction. Well, enough people are going to start placing, bets in that direction, going long Bitcoin ahead of that, trying to front run that event, and it could turn into a sell the news event. So maybe not this next halving, but 3 or 4 halvings from now, you might see price go really strongly up into the halving and then down and down and down after because it's a sell the news event. And then, price, then the halving basically puts a bottom under the bear market. The downside is what the halving ends up doing, right? That's a very likely scenario. Is that maybe even this time, it could happen this time, but as crazy as everything has been, maybe we just simply continue down this pattern of zigzagging around and consolidating until we get closer to the halving and really ramp up hard into the next halving, and that becomes a sell the news event. Because I think it's probably 2 or 3 halvings out that becomes kind of a thing, but then that won't be a thing anymore, right? Then whenever that happens, price gets front run by the halving, and then it becomes a sell the news event. The next halving after that, people are going to be expecting that, and then something different is going to happen, right? Maybe it's just really boring sideways into the halving and through the halving, and the market's just really got a happy equilibrium for a while, and then it starts to trade around more fundamental things, right? So I don't. You got the richest man in the world bought Bitcoin near 40K and 60K. So did Elon add to Bitcoin at 60,000? I don't people overthink this way too much. I don't care about the world's quote unquote world's richest man. He is not the world's richest man, by the way. Elon Musk isn't even close. Not even close to the world. He's the person that has the biggest ownership of a publicly traded company. That's about all he is. He's nowhere near the richest man in the world. That is ridiculous. So, but yeah, he's big influential name person, and so there's that. All right, any more comments? Any more thoughts here before we wrap up? We front run this halving cycle. Says Fair Free Digital. Why is my comments not coming in? Oh, well, my comments are broken, guys. I'm sorry. I can't put up any more comments. Oh, wow. Yeah, I've been way behind on comments. I'm looking at this. Hold on. Let me stop this. Start it again. It's because I want to see these comments. So I'm going to put these up on the screen. There's some good ones here. And then we'll wrap on these comments. Thanks, guys, for the Q. Let's do some Q&A here, and we'll wrap on this. All right. But Michael says, I missed the sell signal. No, yeah, Alan's not here, guys. You guys are fine. We'll be all right. Did I get all right. Yeah, we front run this halving cycle. Yeah, we did, and more people will next one. That's if we figured it out this time, more people are going to figure it out next time, and it's going to continue to happen. And then eventually, retail in general is going to front run the halving, and institutions will be like, "That was fun. Now we're going to sell in your face at the halving and make it a sell the news event and crush retail again." Just the casual retail people cannot win, right? You have to be really plugged into the market to win. That's just the truth. If you're a casual, just oh look, think something going up, I'm going to buy this. You're the guy that gets crushed, unfortunately. Why wouldn't you touch the lower highs, lows incoming? Oh, Litecoin? Why would I touch? Well, you're making the assumption you're going to make a lower low. So yeah, we made a lower high, sure, on a USD chart. Remember, I'm trading this chart. I don't care about the other chart. I wouldn't trade ever buy Litecoin if I didn't think it was going to have the ability to outperform Bitcoin, right? So what I'm constantly watching for is I'm watching for it to bottom versus Bitcoin and take a little speculative trade. And these are small speculative trades, right? I'm not betting the farm on Litecoin, no way. But as we've come into the bottom here, you know, we've made a couple of, where did I first trade it? I traded it over here in the spring. That was good. You know, I got that big move I showed you. This sucker, it was probably my best actual single trade of the year, was this trade. Where'd it go? Compare. That trade right there, let's go to the daily. It was probably actually my biggest, you know, winning, just pure trade. Like, I wasn't holding any of it. I caught that big move. And then I caught this move. And then I got stopped out trying to, so what I thought might be happening, right? We might have had this, you know, this might have been that, and we might go higher. So I was trying to buy, admittedly, and I got stopped out twice here trying to buy this. Played a little bounce here. I did play this bounce, right? Once we got down here, we broke this downtrend. I got in here, and I got out as we broke that uptrend. It was a small win, but offset these 2 stop losses. So for this point on, I think I did try to buy into this bottom here, and we got stopped out right underneath that. So I've got 3 stops, and then I think I had 2 scalp wins somewhere in here. Yeah, I did scalp a move to 167. Maybe this, I don't know what I moved. Oh, it doesn't matter. Point is, why would I, like, I don't care. I don't care about Litecoin's USD chart at all, right? All I'm watching is I'm looking at, instead of buying, you know, Bitcoin leverage, I'm buying Litecoin leverage if I think that Litecoin can outperform at that particular point in time. And what I'm watching is this bottoming pattern. So, yeah, I mean, it's not like I hold on to it very long, right? It's pretty well-defined trades. But whenever time we come into this area, basically what I'm doing, right? I see the support area being put in. I keep buying Litecoin, more or less, when the USD chart is looking favorable and I'm in this kind of support zone. And then I sell once we make a big move out of the support zone. So I guess this was the big winning trade. Yeah, I've had some, like, 2 stop losses trying to catch the second possible move out here, and I've had 2 scalps. I've scalped this twice, which has offset my stop losses, and then I think I had another stop over here trying to buy this support, more or less, right? And so I'm waiting for the next one. But I mean, it's just structured trades, and what it is I'm reacting to this bottoming that we're trying to put in here, more than anything. It's not this chart. I don't really care about this chart too terribly much. But I do prefer both the charts to line up. But yeah, now that, and to your point, I mean, I'll grant you this. Now that we're below this trend line, I'm also really out on Litecoin because I'm just waiting for it to retake some levels. So below this trend line, I'm not going to take any trades on it until I see clearly that we're bottoming and that we're retaking some levels. And then, you know, then I can kind of, you know, maybe clone this even, and we can. I need to see evidence that we are going to resume an uptrend. But you're right, on the USD chart, this is a high, this is a lower high, this is a low. So far, this is a higher low so far, so that's called consolidation. So in theory, you know, this is not a downtrend yet even, right? It is because we lost this. In my opinion, you are right for bringing that out because we've lost that top, that trend line right there. So this is now in danger territory. And if you're purely trading this chart, shorting it's probably the right answer. But even then, I'd be skeptical because it's because we haven't put in a lower low here. Basically, the moment you wick below this, the moment it wicks below this, that next bounce, that's your short opportunity. That's a great short. But until you take out this low, and that means that you've kind of confirmed downtrend, I wouldn't be going short here either. I'm net neutral. Like I was long until we lost it. Basically, you can think of it this way. On the USD chart, all year long, I've been long trades only, not holding it. But I've been long Litecoin, all this price action, back into this area, bought, trading into the here. And I got stopped out, yeah. But I mean, these massive wins more than offset these few stop losses I've had. But now that we're below this trend line, I'm just neutral. I'm totally neutral. I'm not gonna take entries on this until the setup is there, until I can confirm more or less. If I confirm that we're back in a local uptrend, like a really short, you know, go to the 4-hour chart, and I can kind of clearly see it's in an uptrend on like a 4-hour level. What I want to make sure very clearly is that this low does not get taken out over here. If this low does not get taken out, then this is still an uptrend. And while we haven't made a higher high yet, it's not an area to look for shorts until you take that out. Take that out, again, even just a wick below it, the next pop, that's your short opportunity, in my opinion. It's how I trade, right? As soon as that gets breached, that next bounce is going to bounce. Then you short when you see this starting to find resistance and curl over, and you find a good level to short into. Sure, that's a fair comment, but yeah, I wouldn't short it until we do that, until that happens. As of now, I'm just neutral. This is neutral territory for me until we figure out what's. As long as we're above that wick low and we're below this trend line, there's nothing for me to do on the USD chart. If we bounce in at 53K, yeah, LTC pumps do kind of show potential weakness in Bitcoin. So I really only brought it up because of the MWeb upgrade, right? That's what I keep bringing up. That's why I talked about Litecoin, right? The answer to the question about what coins would you mine, I brought up Litecoin because of the upgrade that's coming. A lot of times, projects pump into the upgrade and then sell off after. So the MWeb upgrade should go live late this month. So just watch the charts. If there's a setup, maybe take a long into it. But maybe that's the short entry. Maybe, who knows how this is all going to play out. But it's probably going to be a sell the news when it actually happens. So, just use caution around all that. Yeah, so on Bitcoin, back to Bitcoin. I've got a lot of lines, and I'm sorry for the busy charts. My charts are, again, they're meant to be functional. So, I have other charts that I use for YouTube. This is my main actual trading chart, right? So I'm just going to give you all the decoder ring for my charts. And this line, I would never have these big, fat, stupid, thick lines like this, trend lines. I don't really care about trend lines all that much. If you can see them on my chart, they're just general barometers of things. What I care about is these levels that I've got marked on here. The blue are weekly levels. The green, like this September, I've got them labeled on here so y'all can see them September close. These green lines, those are monthly. Those are probably the most important ones on my chart. But these are important at like weekly, daily closes. Intraday, they're really typically not that useful, like intraday. But the blue lines, these light blue lines, these are weekly levels. So those blue lines, that's a weekly level. This white, if it's a bright white like this, I'm gonna make it bigger so you can see it. And y'all probably can't see it as well as I can. If it's white, that's a daily level. And that's what I'm looking at short time frame. That's what I care about more. And if it's a gray level like this one's slightly gray. Let's make it a little more gray so you can see it a little better. I can see it pretty clearly, but I know like on the stream it's harder to see. So this is pure white. White levels are daily Heath levels. Gray are interesting levels. So this is that wick low right there. That wick low that we put in on September, that's a gray level. It's a tiny bit. Heath talked about this in a tweet or his video or something. I think he tweeted about this. It's a tiny bit of liquidity between that gap that possibly could still get filled, right? And the market's going to want to try to take that little bit of liquidity right there. From that wick low to that wick low, there's a little bit of a delta. Now, I don't. This is not how I trade. It's how he trades. That means nothing to me. This means nothing to me. All I see on my chart is a liquidity grab and a reverse, and now I'm looking to see if this trend line holds, right? That's how I play it. In a short term, this could be the level. This could be the key level to watch. That little last bit of liquidity grab, but then on a rejection of 46. So if the bears defend this 46 level, the levels we talked about, this range over here, if the bears defend that and pile drive price back down, that little liquidity grab that Heath's looking for, good area to look for, I would think it probably would come in a really severe sell-off. You would come into the support range of these two weekly levels and then bounce out of there, 38 to 39,000. That would complete that liquidity grab there, get a marginally lower low, lots of fuel for the upside. Hopefully not take out that low, and certainly shouldn't take out that low. And then off you go. But yeah, that to me, that's, I don't know. There's a million levels in the chart that I can point out. Like, how come the market never grabbed liquidity off this wick, or this wick, or this wick, or this wick, or that wick? Right here, let's draw all the levels that the market failed to grab liquidity at. And tell me if you guys want to overreact to this stuff, because I don't. All right, we got all these. Like if you were playing that, right, you were certain the market was going to hit this liquidity? Well, you were shorting into getting your face ripped off, right? There's a million places where you could look like, oh, the market's going to want to grab that little bit of liquidity. I don't know. It never did. I don't think it has to. That's my opinion. So there's no reason that this little wick 40, again, he's a good price action trader, so maybe there's more to it than this. I just see no reason why 39.6 has to fill. It certainly could. I just see no reason it has to. Now, again, a rejection off of 46, it really starts pile driving down there. That's definitely a good area to watch, this whole range of support right there. All right. Top is in. Wait for alt season. Still holding long. Well, think about that too. Where was the alt season? There wasn't much of an alt season. It was, I guess, a little bit. Not much. I think the alt seasons are dead too. It's another thing. Michael and I talked about this a little bit, right? I think this whole alt season thing is going to eventually die. So you see here's ETH USD. This is a general proxy, or ETH, what did I put on here? ETH USD? Yeah, ETH USD as a kind of a proxy for alt season. You see the alt season reaction was much stronger as we started to roll over here. Then we had a pretty good move on Ethereum ahead of this rollover. And then ahead of this rollover had a more muted move on Ethereum. So it's slowing down. These moves are slowing down. But in every one of these, Ethereum made a big move and Bitcoin rolled over, just like Litecoin does, really, honestly. And then Ethereum outperforms the downside. And then on the breakout, Bitcoin likes to outperform Ethereum on these breakouts, because it did. It did on the last couple. Didn't look like it on this chart because of the way I have it lined up on the percentages. But just go look at this chart, you'll just see what I mean. All right, so the summer low was March. So yeah, here was the alts. This was that first big move in Ethereum. And then on the summer low right here. And then, I guess I'm wrong. Yeah, from this point here, Ethereum did outperform all in all on the recovery. I was thinking I was thinking that the recovery came on one of these hires. But no, I'm wrong. So wait, where was the low at? Was it? Yeah. All right, I'm wrong. So yeah, I guess Ethereum did outperform Bitcoin on this last set of recovery. In theory, well, it's interesting. I did not know that. This is something I just found out as we're talking about this. I was thinking this whole time that there was a point when Bitcoin outperformed Ethereum on the breakout, but I'm wrong. But if you look at back here in time, that big parabolic top that Bitcoin put in was a massive outperformance. That's what this big decline in ETH BTC. The 2017 parabolic top on Bitcoin was a massive series of outperformance by Bitcoin versus Ethereum. Then Ethereum made another big move after Bitcoin started to roll over. Here's the deal. Here's the truth. The war on fiat is going to be won or lost with Bitcoin, not any other coin. Like Ethereum is not going to displace, the global financial system and the dollar and all the other fiat currencies, right? But if anything's going to do it, if anything's going to meaningfully displace the central planned fiat currencies, it's going to be Bitcoin and nothing else. Nothing else can do it. It just doesn't have. There's just too many ingredients to this pot, this stew over here. It has to be Bitcoin. So at the end of the day, either Bitcoin, it becomes a massive global reserve financial asset, or all of crypto is just a tech play, right? It's just a play on the actual utility of the technology underneath it. And so the reality is there's a lot of potential for that whole tech play, right? So all of the cryptocurrencies added together and all the utility they provide and all the services they will end up providing, it's a pretty large market cap. And we're talking, a couple $1 trillion worth of value potentially, right? Just without Bitcoin. Take Bitcoin out of the puzzle. Cryptocurrencies could be worth several trillion, maybe 10 trillion, something like that, right? As a group of assets. But Bitcoin can be it's the only thing that can be way, way detached from those valuations. Like it can be way out there. And frankly, if the rest of cryptocurrency, if any cryptocurrency project, like if you see fans of like a different cryptocurrency, we're going to replace Bitcoin, we're going to like overtake Bitcoin. What they're asking for is they're asking for the cryptocurrency they currently hold to be absolutely demolished and crushed by 95% in price before recovering 50% and overtaking Bitcoin, which will be basically worthless, right? The only way that your cryptocurrency is ever, unless it's Ethereum. Ethereum is the only one that I can see actually taking out Bitcoin and staying above it, and the general crypto market being relatively healthy, because what would have happened is Bitcoin is just reserved to just a reserve asset, store of value that a couple of hedge funds and insurance companies and things put on their balance sheet as kind of like their 3 to 5% inflation hedge, the digital gold. So they have maybe 3% in gold and 3% in Bitcoin instead of 5% in gold, right? They just reallocate between the two of them, maybe add a little bit more because Bitcoin is also technology. And that's all it does. And then the Ethereum's utility outtakes that valuation, right? Where Ethereum is actually worth more than gold. And if Ethereum were to become worth more than gold and really were to replace Bitcoin as the crypto reserve asset, Ethereum could go on to have a bigger market cap than gold, and we could still have a relatively healthy crypto market. Anything else, I don't care if it's Cardano, anything else. If anything else actually were to rise and beat both of them, that means that we had a nuclear apocalypse of crypto. Regulation came and just demolished everything. The green movement completely killed Bitcoin. It's deader than a doornail. It's worth $100 a coin, and it's basically a few people mining Bitcoin in their shed still. Nobody's using it. And then, like Cardano or Outrun or something could be technically the most valuable cryptocurrency if they actually, supersede Ethereum in actual usage. But then their market cap's, 50 billion or 100 billion or something. They're not that big of a deal. Maybe a couple trillion at the biggest. But you're talking about crypto being crushed. So all that said, we all should be wanting Bitcoin to do well outside of the utility that crypto provides, because that's what's that's the best outcome for the whole crypto community, is that Bitcoin becomes detached and it's actually seen as a financial asset and a currency, and then the full value is not weighing on the utility value of the actual utility coin. So Ethereum, Cardano, Outrun, whoever else you like, those projects can be properly valued on the utility they provide, and they're not competing with Bitcoin in any way, because Bitcoin's its own thing. That's a digital gold 2.0 / currency that's being used. That's my opinion. Bitcoin may struggle as a currency too much. Yeah, so John, here's the thing. This early on, Bitcoin will be hoarded. But, again, after several of these quote-unquote cycles, after the Bitcoin halving gets priced in, like we get this situation where the Bitcoin halving gets forward priced in. And then retail gets crushed on a sell the news event after the halving, right? And then that changes kind of people's thinking about some things. And then you have a situation where the market's pretty good. It's actually really well, like say 2035. I don't know. Bitcoin's $1 million a coin, and it's taken over. It's being used for maybe certain commodities trading. A lot of big firms are putting it on their balance sheet, and some businesses have it entirely on their balance sheet, MicroStrategy style, right? It's become a pretty big asset. And heading into the halving, it goes from 800,000 a coin to 1.2 million a coin, and it just stays there, just flatlines through the halving. Because then what happens is the market properly has forward calibrated the supply cut, and it stays pretty flat. If you ever get that situation where the market has finally figured out a good equilibrium of what the market likes it, right? And it's being used in third world countries, not third world countries, but many countries around the world, El Salvador, Brazil, who knows, wherever else it's being used. It's being used in some countries. It's got a mix of usage, and it flatlines. And like through the halving, it's like 1.2 million coming into the halving, and it's 1.2 million going out of the halving for quite a while. And you trade in a range of, say, you're trading in a 1 million to 1.3 million range, and you're kind of range bound for 4 or 5 years. That's the point where people are going to quit hoarding it, because then it's going to be like, okay, it's finally matured and been figured out. And so then it could continue to gain adoption, and then its value maybe increases linearly with the underlying assets unto which it is priced against, right? And so that kind of that march upward continues to happen. But if it happens at a slow enough pace, just like inflation is slow, right? So nobody worries about holding on to the average person doesn't freak out that they have $100 in their wallet because it's going down in value. Like if you go to the ATM, get $100, nobody's running to go buy bread right now. Like even now with inflation, they're not running to buy bread right now because my $100 is going to be worth half of that tomorrow. If we get to a situation where Bitcoin's not going to double tomorrow, right? If it's been $1 million or $800,000 for the past 5 years, right? It's been between 1.2 million and 800,000, maybe slowly inching its way up. And people have kind of got out of the mindset that this thing could just double on me, right? They're over that. Like, it's not going to double. It might go up 10%, whatever, but I need to buy this thing. They're not going to think twice about buying that thing because if they want that thing enough and that's what they buy it with, you know, they're not certain Bitcoin's going to double tomorrow, so they're not worried about spending it anymore. So it just that's adoption. That's the adoption cycle. Yeah. let's all take all of our cash. I mean, that might not be the worst idea to go run out and buy all the bread and milk you can here. I think of Cardano as a play to keep pace with Bitcoin market cap and receive staking interest. Yeah. One thing to remember about staking, when you're staking with Cardano or anybody else, it's a dilution game, right? So it's just like equity raises. So let's say you bought Apple stock, and instead of paying a dividend, they just issue more shares. So if they said, tomorrow we're going to quit paying a dividend, what we're going to do instead is if you own 1,000 shares, every quarter we're going to give you one more share, or whatever, right? Whatever the 4% equivalent would be. And so you get your extra share. Well, are you gaining anything? You're gaining a slightly larger. But if everybody's getting the same, linear increase in their pie, the pie is growing, and your piece of the pie is growing linearly equally with everybody else's piece of the pie. And some of them may decide to sell, which gives you the advantage because then there's new monies coming to the market, so on and so on. And the balance sheet keeps going up, so the valuation is probably going to keep trickling up. But you're not really gaining any more ownership of Apple by getting a share instead of a dividend every once in a while. You're just getting diluted, right? They're just giving you your piece of the dilution. So that's what happens with staking. Like everybody, the winners are the people who are staking, or people who are holding on to the coins without staking. They're getting diluted out, and the people who are staking are simply really just maintaining their ownership share of the pie. So be careful with thinking about inflation. Receiving staking interest as you're getting paid. You're not getting paid anything, right? It's you're getting the whole pie is being diluted, and you're getting your share of that dilution. So you hope the value of the project goes up in total. You're getting your little bit of staking rewards is just keeping pace with the dilution. Is what you're really doing ultimately. A lot of people concerned with the low volume on BTC. Do you have any thoughts? Does this create an environment we need for a parabolic run? Remember, when you have a big move on low volume, that means that there's not a lot of impetus on that side. So when you have a low volume pump, right, price is going up parabolically, it's low volume. It's probably it's going to reach exhaustion at some point. If you see increasing in volume as something kind of breaks out, then you know that's going to be more of a sustained breakout. But if it's a breakout, especially here's a good example, right? This was kind of low volume, and it's one of the many reasons I got real concerned. I said, okay, if we lose this level, guys, I'm out of leverage. I'm out. Like around 67,000 is where I actually got, right around here. Nonetheless, we saw decreasing volume as we came out of here. It wasn't good. It was like initially a little volume spike, but this just was not sustained volume coming out of here. So yeah, that's weak volume on a breakout like this. Not good. Same thing's true in a breakdown. This has been a low volume breakdown. When you get a breakdown that's relatively low volume, that's the same thing. It's it's probably losing steam. So I would say that volume is a derivative of when you see high volume, that means that there's more participants going on that side of a trade or the other, right? And if price is going sideways, and you see increasing volume, then volatility is probably coming up next because it's two people fighting on both sides, and then one side is going to exhaust before the other one. But generally speaking, what you're looking for is when you get a big breakout, you want to see volume, on the back side of that breakout or breakdown for that matter, right? So the last big volume spike we had is right here, and this is because this was an OI. This was a liquidation event. The liquidation events causes forced selling, which causes an increase in volume, but we haven't seen a real high volume profile all the way down. Just like we didn't see a super high, I was calling it out, right? I kept saying all the way up here, it wasn't super high volume. I think we had pretty decent volume on this initial snap right here and somewhere in here. But from this point on, it was really weak volume. So we knew that, okay, yeah, there's not a lot of follow through on this breakout, especially up here when you saw weak volume. Not a lot of follow through. Same thing, there's not a lot of volume over here. There's not a lot of follow through coming to the downside. Now, I haven't looked at the volume profile probably. Let's go look at it right now. Let's go look at it right now because I don't want to say that it's got weak volume and it's not be the case. So answer this question. Let's look at the volume profile. So let's go out 30 days. Let's go to the hour. What do we got here? We got some volume. So we got a little volume spike, 110. That was yesterday. Let's see where that volume spike came in at. That little downside right there, it looks like. Yep. So this little spike down was a decent volume spike, but it's probably the bounce back. So ultimately, if you look at that wick, so yesterday was a high volume day. Look at that wick. It's a big wick, indecision, as actually buyers buying it back up. So this volume spike was actually buyers coming stepping in. There's a big, like somebody dumped a lot of coins very quickly, and then buyers coming in. Those three, let me zoom in some more, hold on. Let me illustrate what I'm talking about. Because of the nature of that wick, you saw this big, huge candle right here, Bitstamp. See that Bitstamp? Bitstamp was selling like crazy apparently. Created a lot of liquidation, cascade sell-off on a Bitstamp dump. So somebody at Bitstamp went and dumped a bunch of coins at this 1 hour. You see this is your 1 hour candles right here, 1 hour bars. I mean, yeah. So this is your liquidation downside event, and then these three candles after that are all to the upside. Because what if you look at that candle again, it was bought right up. So that volume actually, net was probably more buying volume. So the last big volume spike was actually on a failed breakdown. So that's net positive, right? So you got volume. So the volume on this breakdown, if we go here, the 5th, the 6th, and the 7th. Let's look at the volume of the 5th, 6th, and 7th. Let's back out. Let's go 7 days. All right. So we had a big volume move here relatively. 5th, 6th, 7th. But it's declining volume, right? So you had your breakdown on the 5th. The relative volume is more important than the absolute volume. The 5th, there was some sell pressure. The 6th, some sell pressure. 8th, declining sell pressure. A big spike to get that liquid, to try to grab that liquidity below. And then it was actually buying that came in after that, right? So it's been buying side. So this is declining volume and the price declining. And then a volume spike on the sell, the liquidation side, and then some volume coming out on the buy side. Let me see if I can go out a little bit further here and just kind of give some more context. So yeah, let's look at a bigger picture. What's our volume profile? Let's go out 6 months. Let's look at like a weekly volume for 6 months. Yeah, so we had much bigger volume. Summertime sell-off. What is this now? 725. Yeah, the summer sell-off. Well, yeah, so the volume has actually been kind of flat. So this is what I'm talking about, right? The November breakout was this big volume candle right here. 11. That's a sell side volume. But there was weak volume buy side. But then the volume has been, kind of flat. Really, let's go out 2 years here. Now remember, the absolute value, because price has gone up since the left side of this chart. The price of Bitcoin has gone up. This is the number of Bitcoin traded. So volume is naturally going to decline and the number of coins being exchanged because the fiat value of the coins being exchanged is much higher. So this candle here, by value, is probably still bigger than these candles, these bigger looking candles over here, because these candles were trading at, this is early 2020. So yeah, these are really big volume. If I go out further, like if we go back really long time, there you go. So these candles over here, like back in 2019, meant a lot less than these candles over here because the average price of Bitcoin in some of these candles was 3 to 10,000, and now it's 40,000, right? So just always remember that. So it's not the I'm looking more at the relative volume. What is the volume profile since a move started? Is volume increasing or maintaining into that move, or is it decreasing into that move? And so again, looking at this, let's go to the daily, 30 days. We've been pretty much down. How long have we been pretty much nonstop down? About 30 days now? What do we hit? What's going on? So yeah, it's been more than 30 days. So how far out can we go and kind of analyze the sell volume? So okay, from September. Yeah, so let's go out. Let's go out 3 months, or let's look at this at 6 month level. All right. So what was 725? What happened on 725? I think that was that snapback, right? Yeah, this right here. This breakout volume to the upside. All right. So 725, and then 8, early 8. Okay. Breakout to the upside, buy volume. Then you had your early September breakout to the upside again, and then you had a sell-off late September. So we've had sideways volume. We had a big breakout on this was downside sell pressure, and since then volume was declining up until we have some increased volume. Of course, it's coming to the end of the year. Then we've had a little bit of increased volume. I can't get a good read off of this too terribly much. Volume is pretty well flat. So we had a big volume spike on the buy side on 725, a big sell side spike, but it's been declining into that. I would say my assessment is this more sell side? What's today? Today has been, no, the 9th. This is the 9th. What was the 9th? What happened on the 9th? Yeah, so the 9th is the biggest volume day, and it was a green day. So look at that. So the big days were the 6th and the 9th. Let's look at what happened on the 6th. The 6th was a breakdown. So this candle right here, the 6th, this little bit of breakdown was higher volume. And this one day right here, the 9th, where it was kind of sideways, that's a lot of buying volume. What that means. Yeah, so volume has picked up. So I guess the main takeaway here is kind of predictably through the holidays, it was really low. And then volume has picked up early this year. And if you look at, I'm just trying to get a real good idea for, let's go back to 7 days here. Now this doesn't include Binance, which is a big thing. I have to go look at Binance separately and see if it lines up more or less. Yeah, I mean, this is what I see. I see declining volume on the sell side. That one big candle was that big spike down, and then a lot of buying activity. And then it's been net buying through here. We don't have, so the 11th, let's see here. Yeah, this morning, we had a decent amount of volume buying this morning here. Let's go to the 4 hour. Yeah, that green candle right there was pretty decent volume. So yeah, these are big volume candles over here. There's a big volume candle right here in the middle, which was, maybe this snapback was more what that volume was. One of these over here. Maybe that. So the big volume candles, let's just look at this. This was looks like it was big volume. I'm not sure if it was somewhere in here. Probably this candle was big volume. This was big volume. And this was big volume. Everything else has been kind of muted volume. So, I guess pretty even all in all. You get these big volume spikes buying sell side. So I wouldn't say, I think the other way of looking at it, if you just look at this, I don't know there's really that much declining volume, to be honest with you. It's declining from 2020. 2020 was a banner year. It was just a huge year. A lot of volume in 2020. So far we've seen, let's go look at the monthly. Let's go 2 years out monthly. Let's just get a broad picture. Yeah, you see like the volume in December 2020 was through the roof. And then the sell side, yeah, 430 was really good volume too, and that's when the selling kind of started, I think. And then yeah, the summer, all this downside has been largely kind of muted volume. So really, to ultimately answer your question, the next big move in volume like this that we see is going to give us a lot more information about the direction we're going to go. Hi, Mindy. I don't care about death crosses at all. I ignore them entirely. Do not care. Death crosses mean Zippo to me, so I'm not a good source for your answer. I've back tested them. They just don't matter. They do not matter. You actually get kind of like a fade the news event around death crosses. Let's go look at them. It's probably 50 and the 100 is what you're talking about, death crosses. But yeah, there's your death cross. Like, you look at all the times they've happened. It's like, okay, we're getting close to a bottom when that actually happened. A little bit more downside, and then it snapped right back, right? This one happened right here. Well, we've already had two. Right? Think about that. Let's think about this too. Think about this too. Over here in 2017, go back over here. we didn't get our cross back to the upside. This is the 50 and the 120, right? We didn't get a cross back to the upside till way the heck over here. This was the death cross, supposedly, on the downside. And that, you know, that was a good forecast of more downside. And then this one over here is a pretty good forecast of some upside. And then you got your death cross over here. And then up and then down and then up and then down. It's a sideways market. All right. What's interesting to me is that we got a death cross. They got one bullish one to the upside right over here, right? That was a good, you know, indicator of a lot of run ahead of us. Then you got a sell side one here, but then you got another bullish one here, and then another death cross. So what I'm seeing is this, right? These frequent crosses. So, you know, that happened more in the bottoming pattern over here than anything. But I don't think much of them. I really don't. I don't care. What I care much more about is the trajectory. Like, this is what I care more about. Take the 120 off of here. The 200-day moving average is still moving upward. Like, when the 200-day moving average is decidedly moving downwards, that's something to sell into. But when you get this 200-day moving average flipping upward, then dips below it are typically buying opportunities. And then the other thing, too, is the 50... You know, the 50 even crossed the 200 there, and there it's going to cross again here soon. I don't think much of it other than beneath the 50, I'm more guarded. I'm more cautious than when we get above the 50, especially when the 50 is above the 200, the 200 is moving up, then I'm much more bullish, right? But, you know, bottoms happen. Bottoms are going to happen below moving averages. That's just the thing. When you put in your absolute bottom, you're always going to be below all your moving averages. So just because you're below the moving average, it generally means the trend is down, right? But your eventual bottom happens always below them, and the eventual top always happens above them. So just because you're above them doesn't mean it's going to keep going up. You could be running into exhaustion, and just because you're below them doesn't mean it's going to keep going down. You could be running into exhaustion. So I don't have a good. I don't care about death crosses. I don't know. I don't want that. So I got some. I don't worry about the death cross, man. Yeah, that's me. All right, guys, I'm going to wrap up here. We've talked about a lot today. I hope it was useful. Hope everybody found this useful. Thanks, everybody, for joining me. Anyway, I don't think the bull market's over with. That's the main gist of it. If we lose this trend line, I'll change my tune a little bit. Now, I did notice on that video that Heath did as well that he did highlight. It looked like we had lost it, but on log chart. If you look at the log chart, I don't trade on log charts, and most good traders I know don't care about the log chart. So I don't know where that came from, but yeah, on a log chart, sure, but I don't trade the log chart. I trade. I don't care about it. And on this chart, we're so far holding it. So if we lose this and get some, moves to the downside, especially if we take out these lows, I'd be really concerned. Take out this low right here, I'd be moderately concerned. So yeah, there's another level, 38,000 right there. There's a couple barometers for you guys. You get some breakdown of this trend line to the downside and then curl over. Something's really, really, really off. But otherwise, above all this, again, in my book, this is a high, this is a low, this is a higher high, and so far this is a higher low. That's what I see. All right, take care, everybody. Michael says rejection at 55K, 50K, let's talk. Yeah, no, that's a good point too, right? So we're looking for a bounce. Everybody and their dogs, look how fast, this is not a sustainable sell-off, right? It's going to bounce. It always does. You go back to 2017, any other time you want to find, you'll find a bounce. It's going to bounce, and it's going to come into 50, 55, something. And then when that curl over happens right here, as it starts to curl over whatever that resistance is that we decide to look for, right, once we get there, I'm going to watch fundamentals like a hawk. If we see a bunch of coins, little bitties, Bitcoins pouring onto the exchange, and I see hawkish Fed talk, and I see the reality of rate hikes, and the markets are really in panic, and the bonds are spiking, and all kinds of stuff's happening that's telling me, okay, the markets are in trouble, and coins are coming on exchange, people are getting ready to sell right around this, as we come into resistance here, I will then quickly change my tune. As of right now, none of that's happening. Right? I see fake talk by the Fed. It's all rhetoric. I see, liquid supply ratio is very, very high. I see derivatives. The other thing too is if we get a short side wipeout and it's clear that the derivatives are now being stacked back to the long side, we see futures funding rates spiking 3% plus as we come into this level, and coins are pouring onto exchange, and the Fed is actually showing signs of some hawkishness and things like that, then yeah, we need to change our tune real fast. So there's a bunch of barometers for you guys. But until then, I don't see any reason to panic. All right, everybody take care. Fed has not tapered. My throat is killing me. I gotta wrap up. Let's see here. YouTube and the Doge coins. Let's wrap up with some Doge coins and I'll send you guys on your merry way. It was fun though. Where's my Doge coins? What else we got here for comments right before I wrap up? Hello, Dogecoin. You got a YouTuber with their face. You gonna play Dogecoin? Look at comment as we wrap up. No, not diff checker. Go away. The Fed has all summer and winter to be hawkish if inflation is really a problem. See ya. Yeah, this is not going to work. All right, guys.